Today in crypto, another big company has announced their Bitcoin purchase. The floodgates are about to break open here, guys. 2021 is going to be crazy for crypto. Also, Fidelity has released a new report calling for 5% of investor portfolios to be put into Bitcoin. That is so damn bullish. There's so much money sitting on the sidelines globally right now. Even a 1% allocation would drive Bitcoin to the frickin' moon. 5%. That's going to put us like in another galaxy, man. It's going to be crazy. My name is Lark, and this is where you subscribe for all of the hottest and all the latest happening out here in the wild land of crypto. By the way, I know that I covered BlockFi in yesterday's video, but just today they have announced a massive new promotion that I've got to tell you about. So until the end of October, you will be able to get up to a $275 crypto bonus paid out to your account if you are signing up for a new account and you use the link down below in the description when you sign up. The more you deposit, the bigger the bonus you will get, up to $275. And in addition to the bonus, of course, you're still going to earn the great rates on your crypto. So you're going to get that 6% on your Bitcoin, that 5.25% on your Ethereum, that 5% on your Litecoin, 4% on Paxos Gold, and 8.6% on dollar coins like USDC. There has never been a better time to sign up for a BlockFi account and to start earning passive income on your assets. So again, link down below where you can check that out. But do hurry, as this is a limited time offer. Okay, so let's jump into the first big story of today. We have got another big Bitcoin buyer on board. This time it's a company called Stone Ridge Asset Management. They have just announced that they bought $115 million worth of Bitcoin, or about 10,000 Bitcoin. That's amazing. Stone Ridge manages $10 billion in assets, so this is a significant play for them without a doubt. It is worth noting that they are rather familiar with the Bitcoin business already. They launched the New York Digital Investment Group, NYDIG, back in 2017. So they are very familiar with what is going on in crypto. In fact, just this year, NYDIG closed a $190 million Bitcoin funding round. They've done a few other rounds this year, including a $50 million round last week, which saw companies like Ribbit Capital and Bessemer Ventures making big Bitcoin purchases. Now, apparently, most of the investors that are using NYDIG have around 1 to 5% of their total investment portfolios into Bitcoin, which is definitely awesome and really something to think about, that these investment firms are starting to follow the advice. But today's announcement from Stone Ridge is a big deal as well, because the parent company of NYDIG actually invested in 10,000 Bitcoin. Of course, they handed that over to their subsidiary, and they're going to be the custodian of that 10,000 Bitcoin. But what drove them to buy $115 million of the Bitcoin? Well, it's the same reason that smaller firms like Ribbit and Bessemer are buying Bitcoin, and why other big companies are buying Bitcoin like MicroStrategy and Square. It's the macro backdrop. And of course, you bring that in with the public health crisis with the pandemic. This has caused a lot of institutional players to rethink their portfolio strategies and compositions. And with the recent high-profile Bitcoin purchases by MicroStrategy and Square, the signal is clear to investors. Bitcoin's safe, Bitcoin's normal, Bitcoin's a good asset class to invest in. Come on in, the water's great. And as the macro situation grows more uncertain and fiat currencies look even weaker, the money is going to continue to flow into assets like Bitcoin. Let's just have a quick look at a few stats here. So 22% of all USD in existence was created in 2020. That's astonishing for all of the wrong reasons. A report has just come out as well by Rosenberg Research, which has concluded that the Federal Reserve will need to print at least $5 trillion in 2021 to avoid the worst scenarios for the US economy. So more inflation is coming. There are already as well record low interest rates in the USA. Possible that the USA could actually end up seeing negative interest rates. And don't think that it can't happen in the USA just because it hasn't happened yet. Europe already has negative rates, has for a few years now. The UK is about to implement negative rates. So in the USA, we can see rates go negative or simply be zero or near zero for the foreseeable future. The Federal Reserve is targeting near zero interest rates, and they're also targeting inflation over 2%. Analysts are saying that inflation could even hit between 5 to 10% over the next few years, which is just mind-bogglingly incredibly high inflation. All of this is incredibly bad for all these companies that are holding massive piles of dollars. Think about it. 2 publicly traded companies have announced their $500 million worth of Bitcoin buys in the last 2 months. We have hedge funds, we have private funds, we have venture capital firms. They're all starting to invest in Bitcoin right now. Some are a little quieter about it than others. But remember that this year we got the news about Paul Tudor Jones, one of the most famous investors in the world, and his Bitcoin play, putting a few percent of his firm's money into Bitcoin futures. And now, of course, we have Stone Ridge coming out, again signaling that Bitcoin's cool. It's what all the trendy funds are doing. Come on in, guys. And we haven't even accounted for the vast sums of money in the hands of family offices and high net worth individuals, and of course, between all these different factors, the public and private companies, public and private funds, the family offices, the endowments, the pension funds, of course, all the world's elites and the oligarchs and the millionaires and the billionaires. I mean, there's just so much cash, trillions and trillions and trillions of money sitting in bank accounts that's going to start being victim of negative rates and massive inflation. A portion of this money is absolutely going to flow into Bitcoin. It's also going to go to gold. It's also going to go to stocks. And yes, dare I say it, other cryptocurrencies besides Bitcoin. Cryptocurrencies like Ethereum and Polkadot, they offer high yields. Yes, this paid out in their own native cryptocurrencies, but still, it's something like investing in a riskier tech stock for a lot of these guys. Market cap's relatively low and the yields are quite high. Big money will definitely flow into these other assets as well. And ironically, the bigger the market cap of crypto grows, the more serious it will be seen by these bigger investors. Right now, it's so small for some of them, which is, I know, crazy, but that's the truth. Bitcoin at $1 trillion market cap, it's going to basically be a switch that just sparks all this more investment coming into the ecosystem. Which leads me on to the final story for today. Fidelity Investments is now calling for investors to allocate 5% of their portfolios into Bitcoin as a way to have exposure to an alternate investment class. Fidelity, in case you're not familiar with who they are one of the biggest asset managers in the world. In total, they manage $3.3 trillion in customer assets. Now, if, as they recommend, this were to be 5% in Bitcoin, then Fidelity would have $165 billion in Bitcoin under their management, which is 75% of the current market cap of Bitcoin. Remember, there are only around 2.5 million Bitcoin available on all exchanges to buy right now, so that doesn't add up. 63.3% of Bitcoin is in cold storage and has not moved for more than a year, so that doesn't add up with them getting up to such a large percentage. Less than 2.5 million Bitcoin remain to be mined over the coming years. Again, that doesn't add up to the big number that could be their 5%. And they're just one investment firm, one of the biggest, but still just one. If we look at 3 of the other top firms, what would we see? Well, Vanguard has 6.2 trillion. Charles Schwab has 3.25 trillion. BlackRock has 7.43 trillion. This is around 17 trillion in total between these 3, excluding Fidelity, of course. If just 1% went to Bitcoin from these 3 firms, again, that would equal around 75% of the current market cap of Bitcoin, around $170 billion worth of Bitcoin. There is a painfully scarce amount of Bitcoin compared to the money ready to enter the market and buy Bitcoin. So what does all this mean in the most simple terms? Numbers gonna go up, my friends. That's what it means. And what will the sales pitch of companies like Fidelity be to convince their clients that investing in Bitcoin is a good idea? We'll have a look at this chart here. It shows the annualized returns of a portfolio with 0% allocation in Bitcoin. That's 6.83%. So that's bonds and stocks, 6.83%. If you go 1% Bitcoin, you get 7.98%. That's a big jump. That can mean a lot of money for investors. 2% is 9.11%. Wowzers, that's a big jump. And just 3% of Bitcoin gives you 10.24%. Any smart investor would be crazy to ignore those kind of returns. The numbers speak for themselves. Anyway, the entire Fidelity report is almost 30 pages long, so I'm going to leave a link down below for anyone who does want to have a read through that. I'll put that down in the description for you. But the message is clear here. Frickin' just buy Bitcoin, guys. The risk to your portfolio is small and the potential for gains is massive. Ignore Bitcoin at your peril. We keep buying, we keep stacking, we keep chilling. It's a simple strategy. Anyway, your question for today, what do you think is the correct percentage of Bitcoin to have in an overall portfolio? Is it 1%? Is it 3%? Is it 5%? Is it 10%? I know I'm a lot deeper in than 5 or 10% personally, but what do you think? What is the right number in your opinion? Let me know down below in the comment section. Thank you so much for watching today's video. Long live the blockchain and peace out till next time.